This is the Southside School of Financial Freedom watch list and market report for the week ending November 27th, 2021. Our question this week is, what is dollar cost averaging? The answer will be provided later in the video. This week the market ended lower. The Dow Jones Industrial Average decreased minus 2.53% on Friday and was down minus 1.97% for the week. The S&P 500 decreased minus 2.27% on Friday and was down minus 2.2% for the week. The Nasdaq decreased minus 2.23% on Friday and was down minus 3.52% for the week. Looking at the week, we can see that there were 5 up finishes versus 7 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average was up, but the S&P 500 and the Nasdaq were down. On Tuesday, the Dow Jones Industrial Average and the S&P 500 were up, but the Nasdaq was down. On Wednesday, the Dow Jones Industrial Average was down while the S&P 500 and the Nasdaq were up. On Thursday, the market was closed. And on Friday, the 3 major indexes all finished down. The new unemployment claims were 199,000 versus 260,000 expected. Mortgage rates were up for the 3rd week in a row due to a home buying surge. Home sales rose 0.8% in October. The president picked Jerome Powell to continue to lead the Federal Reserve. Oil dropped 13% on Friday, and Bitcoin is down 20% from its recent high, which put it in a bear market. New unemployment claims, the surge in home buying and mortgage rate increases, the rise in home sales, Jerome Powell being picked to continue to hit the Fed, oil dropping 13% in a day, and Bitcoin entering a bear market are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is dollar cost averaging? Dollar cost averaging, or DCA, is a simple investing technique that entails investing a fixed amount of money in the same fund or stock at regular intervals of time. For example, if you have a 401k plan at work and have a fixed amount of money invested in the fund every time you get paid, that is dollar cost averaging. Or if you invest the same dollar amount in the same stock or fund every month or 3 months, you are dollar cost averaging. Dollar cost averaging is a technique, but it is also an investing strategy of investing the same amount of money in the same stock or fund at regular intervals. Let's say monthly or every quarter, whether the stock price is going up or down. Since the market goes up and down daily, sometimes DCA will cause you to buy at higher prices and sometimes at lower prices. The number of shares bought each time will be different as well. The goal is to accumulate shares over time, not time the market. Because most people know timing the market is virtually impossible. The overall effect is an average price for your shares purchased. Using DCA to invest is a way to automate your investing for the long haul. Do you use dollar cost averaging to invest in stocks? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending November 27th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week is Abbott Laboratories Incorporated, ticker symbol ABT. It's in the 3rd column. It decreased minus 0.76% for the week, but it was up 0.65% on Friday. Abbott Labs' business is the discovery, development, and the sale of a diversified line of healthcare products. Looking at a summary of results, you can see that Abbott Labs has increased almost 15% year to date. I did not trade Abbott Labs this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the 3rd column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is up 8.72% versus 22.76% up for SPY, a difference of 14.04%. The Southside is losing to SPY by just over 14%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit earlier this year. It had been outperforming the market recently, but it has dropped for the past 2 weeks. It is now in bear territory. The portfolio is 75.66% in a Bitcoin trust, equities including puts, calls, and ETFs, make up 23.49% of the portfolio. Cash is 0.85%. The cash flow generated for this week was 0.64% of the portfolio account value. The account value changed by minus 5.19%. Meanwhile, the S&P 500 ETF SPY changed by minus 2.12%. I sold option contracts on 2 positions this week. They were both calls. That ranged from $345.40 to $503.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. And check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.